Okay. Welcome to this edition. My name is Yusuf Mulinya. I am the lead trainer with ERP Champions Limited. My job is simple. It's to prepare you to be ready to receive investment. So we carry out a lot of coaching and training, and we provide a range of web-based services to help you to that end. So today's topic is about financial projections, right? That's good. So I would like to share my Excel. Excel is my favorite worksheet. I mean, just as a stethoscope is to a doctor, Excel is to accountants. Right? So I'm curious, which business would you like me to model out? What's your favorite type of business? Anyone? Maybe you can write in the chat. Bakery, okay. Service-based business, okay. Online business, all right. Maybe let's go with something a bit more complicated, huh? Okay, these are too many options. Let's go with a bakery, right? Because if we go with a bakery, it means we will go with manufacturing. So it will at least cover the entire spectrum, right? Okay, so. All right, so financial projections. There are a lot of things to consider. First of all, in the first year, we would like to see financial projections broken down on a monthly basis for the first year, right? That's the first thing. You want to see projections on a monthly basis, but broken down every month, okay? So, next thing. What product is it that we are selling, right? So maybe the business type for now. Let's go with the bakery, okay? And let's make things easy. Maybe we make just one type of product, right? So whoever gave us that option of a bakery, I request that you unmute and we kind of do this. Carol, if you could unmute and fill us in on some of this information as we go along, all right? Let it be interactive. All right. Product. Let's say we're making bread, right? And our bread is gonna be 1 kilo, okay? So these are the things to consider. What is the price? Generally, what's the price of bread, 1 kilo? Carol, can I go 2,000? Is that fair?
It's 5,000.
Oh, all right. Okay. So now, once I know the price, I now need to think of my costs, okay? Now, it's important that we divide our costs into two types. They're what we call variable costs, and they're what we call fixed costs, right? Are you aware of the difference? Now, variable costs are costs which change with the volume of business which you're doing, okay? Variable costs move with sales. On the other hand, fixed costs do not move with sales, okay? They could be changing, but the change is not influenced by sales. Okay, so quickly, what are some of the examples of fixed costs and variable costs? An example I can give you is rent. You know, rent, irrespective of what you sell, is likely to be the same. So let's say I rent a bakery at maybe 500,000 shillings. All right. I would like to have some commas in here. All right. Oh, didn't do it. Okay. So what are some of the variable costs? These tend to be also called production costs, right? So Carol, what are some of the production costs that one would incur in making bread? It seems I'll have raw materials, right? And these raw materials are a certain number of them. I assume there's baking flour, maybe there's baking powder. What else?
Yeast.
Sugar.
Yeast, right?
Yeah, there is no
Sugar.
baking powder.
There's what?
There is no baking powder
All right.
in bread.
I'm not much of a baker. Go
Sugar.
on. Sugar.
Yeah.
Okay.
Oh,
That's all.
Margarine,
Margarine,
some salt.
some salt.
Yeah.
Okay.
That's it for now.
Okay. And these are the materials which go in.
Mm.
water.
Right. So
Maybe packaging.
let's estimate.
Packaging.
What is the cost per kilo? Because you see, I am selling bread per kilo. I would like to estimate these costs per kilo, right? What would be the estimate here?
3,500,
Sugar,
3,000,
yeah. Margarine,
3,000.
yeah.
About 1,000,
Mm-hmm.
500 shillings. That's just rough.
Okay.
Mm.
But would this
I
make,
don't-
okay,
I
how
don't
many
make
pieces?
bread.
Sorry?
I don't make bread.
This will make bread?
I don't make bread. I'm just estimating, eh?
Okay, it's good. It's good that you have some working knowledge. I don't. It's just that I
Mm.
like bakeries as well.
Okay.
So, but the question is, when you mix this, how many kilos are you likely to make? Are you likely to make 1 kilo or 1 piece?
About two.
About 2
Two
kilos.
pieces. Honestly speaking, the baking, the sugar is low, eh? Sugar should be low. Sorry about that.
Yeah.
Sugar should be around, because if it's kg,
Mm.
then sugar must be like 300 grams. Okay, like 1,500.
Yeah. And maybe even just
Margarine,
1,000.
yes, that's like 500. Then the salt is about 100 shillings or even 50.
Yeah.
Mm.
Yes, but generally you can see the variable costs. But we need them to be much, much lower than the price.
Yes.
Okay. Yeah. So, all right. At least you've given us an indication. Huh? Now, you would then ask yourself, is labor fixed? Do they pay people on a monthly basis, or do they pay people per piece of bread made, right? So for now, let me assume they pay everyone a salary, okay? So you can see, you have to pay attention to the behavior of your costs. Do your costs move with sales, or do your costs move on a monthly basis? Generally fixed costs. So let's say I have $1 million in salary. Let's say I have to do licenses. but licenses are normally annually. Maybe if it's $500,000 per year, I would have to divide by 12 so that I get my monthly cost. Okay, and so on and so forth. I would expect you to list all your fixed costs. However, we tend to forget one key cost, and that is depreciation. Huh? What is depreciation? The loss in value of your assets. Okay, so because keeping in mind that to start a bakery, I'm sure you're going to invest in ovens and a lot of equipment, and you're going to maybe do buildings, right? So, and all these things do cost you, right? And yet their costs are neither classified as fixed or variable. These are capital expenditures. So let's say I invested 5 million in an oven, and maybe I put up a structure of 10 million, right? And so on. For now, this would be my total assets. Okay. For me to be able to compute, Deogracius, if I could quickly unmute and ask a question, but hopefully you're not.
Yusuf, I was just I thought we should put off the issue of water and power because I wanted it to capture it there so that it brings out a picture
Okay,
clearly.
so how would you classify water and power?
Because where I wanted it captured there is water could easily be increasing as you increase production, the same to power. Right. I don't know whether it remains fixed or it goes the other side. So I wanted you to guide us on that show. Thank you.
Okay, thank you for that. So generally, you would have to assess what percentage of your electricity bill is from your production. So again, this is the keyword, production. And fixed costs are also called non-production. Okay? So there are so many names to kind of help you know where to classify. So that means if you have an electricity cost, which you can attach to how often your oven is on, maybe you can put it here. But also you might find that in your office, you have computers, you have all these things within your office which also consume electricity. And that electricity is not production, it is non-production. So you can also have electricity here. So that means you should be able to divide your electric bill, all right? And your water bill as well. Okay, so, all right. Deogracius, I hope I've answered your question. Okay, let's go on.
Yes, no, yes, you have, please. And I'm following.
All right. So we now know the cost of our assets. We are trying to compute the depreciation, okay? And the depreciation, to do it, we need to estimate the life of the assets in years, how long these assets are likely to serve us, right? So you could say, all right, this oven might serve me for 10 years, these buildings maybe 20 years, okay? And therefore, my annual depreciation is the cost divided by the life. All right? So this is going to mean that every year, I lose 1 million shillings in value. Or rather, the cost of using my assets every year is 1 million shillings. That's the best way to interpret depreciation, all right? But the model I'm trying to do is on a monthly level. So I will get my annual depreciation and I divide it by 12, okay? So don't forget to include depreciation in your monthly costs, right? Boom. Bernadette, what's your question?
Thank you, thank you. I think delivery costs should also be included somewhere since we are supposed to supply the what? The loaves.
Oh, the customer. Yes. Delivery costs. All right. I like that. So you can consider adding delivery costs. As long as you can find you can actually attribute your delivery costs to each loaf of bread. Huh?
Yes.
Yeah. Okay. So very important that you pay attention to the behavior of the costs in your business, right? Some of you might borrow money, so you're going to have interest charges. Some of you store this equipment, you're likely to do repairs and maintenance, and so on and so forth, right? Okay, so that is one of the points. Once you have broken down your costs, okay, the next thing is we want to estimate what are our monthly sales, what are our targets, number of loaves sold per month. Okay, each is 5,000 shillings. Maybe you can say every day, what if I sell 5 loaves a day? Is that enough business? I don't know, but okay, 5 times 30. Let's say I am able to do 150 loaves for now. Okay. So what's the next step? What's the next step? What's the next step? So as you can see, this is basically forming the structure of our profit and loss. So I call this part 1 of forecasting because it's unlikely we can finish all this in one session, but at least the profit and loss, we can do it. Yeah. Because after this, it would be nice to see how the cash flow comes in and the balance sheet. But for today, let's just look at the profit and loss. Huh? So profit and loss statement. Are you guys okay with this formula? Sales minus costs equals profit. Are you okay with that? All right. It's a basic formula. But we've now divided our costs into variable and fixed, right? So sales minus variable costs, right? Yes, tax is a cost. Patrick Kadama, hey, Patrick. I hope that's my buddy, right? Yeah, tax is a cost. We should include tax later on. Thank you for that. Let's keep tax somewhere here in the corner. I'll revisit it. So once we've split costs into variable costs, we can now say sales minus variable costs equals something called contribution. If contribution is too complicated for you, you can go with gross profit, right? Sales minus variable cost is gross profit. Is that all right? Furthermore, once you get your gross profit and then minus the fixed costs, we should get profit. Okay, we've kind of just expounded on that formula. So let's apply it here. Sales. The formula for sales is the number of loaves sold times the price per loaf. You agree with that? Great. All right. Then, if that is my sales, let's do this. Let me kind of copy this and insert it up there. Okay, so these were unit per unit items. Okay, so we said sales minus variable costs. So this was per kilo or per piece, but now I want to find times the number of pieces that I've sold. So it's going to be the baking flour per kilo times the number of loaves sold. You see that? If I can fix that, sorry. Is that clear? Raw material times the number of loaves sold. I just drag that formula. okay? So I'm trying to estimate the total variable costs per month. Please note, this was variable cost per kilo or per loaf, right? But if I sell 150 loaves, I just multiply everything through, right? Just to cross check, the 3,950 times 150 gives me the same figure, okay? Right, what is the next step? We've said sales minus variable costs is contribution, okay? So I can add contribution right here, or what I call gross profit. Okay, so my sales minus my variable costs is my gross profit, okay? Then we've said gross profit minus your fixed costs should give you your net profit, all right? So here, let me add total fixed costs, right? I have fixed costs of 1.7 million, right? Therefore, my net profit is going to be my gross minus fixed costs. All right. So this puts me in a situation when I'm saying that looks like the level of business I am predicting will not be enough for me to make a profit. In fact, I'm making a loss, right? So here's another point that you need to consider when you are forecasting, okay? Have you heard of break even? To break even, what does that mean? Your sales generally cover all your costs so that you do not make a loss and you don't make a profit. Or basically break even is at that point of zero profits. Think of it as the minimum quantity you need to sell so that this business does not make losses. So there's a formula really, but let me just take you through it quickly. If you know your price per piece, and you know your price per piece, and you know your variable costs per piece, you can find something called contribution margin or gross profit per piece, right? Which is your price minus the variable cost. So you make 1,050. The way, if I may just explain this word contribution, in short, it's contribution to your fixed costs. Basically, you want to find out each piece of bread you make contributes 1,000 shillings to your fixed costs, all right? One piece of bread. So the question is, how many pieces of bread do I need so that I cover all my fixed costs so that I break even? That is the logic behind all this, okay? So in short, break even is gotten by, you get your fixed costs and you divide by that profit per piece of bread, right? 1,643, right? So this means, should I sell 1,643 pieces of bread, I will break even. So let me change that here. 1,643. Do I break even? More or less, zero profit. It's as good as zero profit. So it's important to know your level of break even. All right. So what's next? now that I've kind of gotten what
Hello,
this is
Yusuf.
going to look like on a monthly. Yes, Deogratius?
Yusuf, I just wanted to have a to make you clear this a little. When we look at our fixed costs, I think the rent was it also monthly or it was annual? Because I don't know whether all the fixed costs we have also broken all of them into monthly.
Monthly.
So that we are not okay. Thank you.
Yeah, they're all monthly. And if you have an annual cost, break it up into monthly, right? The example I showed you was licenses. If I pay a license fee of $500,000, I divided it by 12 so that I get 41K per month. Okay, so my challenge now is I want to build a model for the whole year. So what I'm going to do is just spread all this out. Let's see how far I go. Okay. All right. Okay, let me zoom out a bit. Is that too much? Okay, there we are. But just to make sure everything is consistent, the price, sales. Okay, I guess I'll answer these questions after. So I can make these costs generally the same. Okay, so you now have a model that you can use to forecast on a yearly basis, right? Furthermore, you could now get your year totals, right? You might not need to add the price, but yes, you probably are interested in knowing the quantity, the total bread that you sell in a year. You're probably interested in knowing the sales for the year, all this. Okay. And that is how you build your profit and loss forecasts. All right. So, quick one, back to the tax. Someone asked about taxes. To improve on the structure of this, instead of calling it net profit, I would call it profit before tax, right? Alternatively, it's also called your operating profit. And then I can have the tax here. If I estimate it at 30%, right? So tax is going to be your operating profit times 30%. Now, of course, we are providing for it on a monthly basis, but we know tax is not paid on a monthly basis. And that's the difference between profit and loss and cash flow. Okay, then I can get my profit after tax. Or I could call it my net profit, right? Which is that minus that, right? Okay. So, here's another important thing to note. It's also important to know some ratios, right? So for instance, it's important to know your gross margin expressed as a percentage, which is your gross profit divided by your sales, right? 21%. If I spread that all across, okay? It's also important to know your net profit margin expressed as a percentage, which is your profit after tax divided by your sales. expressed as a percentage, right? Okay, so now, once you have this model, you now know your break-even quantities. You can now start thinking hard. Is my price low? Could I get away with increasing my price? If I increase my price to 6,000, what is the impact on the break-even? The break-even goes down. You see that? What if my fixed costs increase? What if you keep asking yourself all these what if questions. And that is how you can quickly arrive at forecasting your business. All right, so let me just take some questions. John Katende. Okay, maybe let me start from the top. Okay. All right. Let's see. All right. Okay, fixed costs like insurance. Yes, insurance is a good idea. Okay. Okay. Right, I'll avail my contact. Okay, John Katende, I think I've answered this question. Fixed costs are monthly, but variable costs are for 1 day. Okay, so what I did here at first, this was the variable cost. It was per unit, right? But then on a monthly level, I had to multiply by the number of loaves sold per month. So I think that answers your question. Shani, is depreciation calculated every month? I would recommend that you calculate it every month. Although most of us only do it at the end of the year. Please include depreciation on a monthly basis. As you can see, these are assets which you're using every day, every month. So they lose value on a monthly basis, if not on a daily basis. All right, let's go on. And we don't include payee. Feel free to include payee. This salary should generally be your gross, right? Gross, meaning it includes the NSSF and whatnot. And maybe you feel free to include the 10% employer's contribution, right? Yeah, that's how it is. Why do you say 30%? Yeah, John Katende has answered that question. Generally, the tax rate is 30% for companies, okay? What happens if the business has only variable costs and no fixed costs? That's a good one. Then that's a very good business to have, right? It just means that if you have no business, you will have no costs to pay. Isn't that what it means? Right? Because the main issue is if you have fixed costs and you have no business, then you're in trouble. You have costs that you have to pay. Okay, that's great. I hope I answered that. How do I determine my market capitalization value of my business? Ben Okello. How do I determine the market capitalization value of my business? That is a loaded question because most of our businesses are private businesses, so we do not really have a market value of our business. But how can I answer your question in a precise way? So let's say I've invested in this bakery, and you can see, all right, this is a small profit per year, right? Assume that I've invested 15 million in this business. Yeah. So it's really about your risk appetite. It's about how quickly you want your money back, right? So all of us have different risk appetites, and we also have different target payback. Payback period is in years. Huh? So for instance, people who are in real estate generally go for what? 15 years, 20 years. So if you expect your money back in 10 years, that has an indication on your return on investment. Yeah. Would you agree that if you expect your money back in 10 years, your return on investment is 10%? Meaning every year you get 10%. So 10% times 10 years is how you get 100%. Okay. So what is your risk appetite? What is your target rate of return? Those are things which will help you value the business. Okay. The other point is, so let's say I have invested 15 million and I'm going to get my money back in 10 years. So kind of that gives you a very rough estimate of the value of your business. How quickly your business can return that money can be an indicator on your value. There are many other indicators. I wouldn't want to go into that in detail, but that is one of the indicators of business value. Okay, for the daily wages, we would only get those attached to the actual production as variable. For daily wages, would we only get those attached to the actual production as variable, and then other variable like office cleaning into fixed costs? Yes. Yes. The question is, what moves with sales? If you sell more, chances are your office cleaning costs are not going to increase, right? So this will fall under fixed costs. For daily wages, it depends. If it's the wage of the chef and other people who are involved in cooking, it sounds like the more bread you sell, the higher they are likely to earn. But that's if you pay them per piece of bread. But if you have a fixed wage on a daily basis, that means more or less you fixed their salary on a monthly basis. So that way I would put their cost under fixed costs. All right. I hope that's clear. Sam, I see your hand up.
Yeah, I was inquiring, for example, those materials. For example, they bring baking flour and other materials and in bulk. Then you get people to off-road. To off-road those things. Now, where do you count that cost? For those workers who just off-roaded and you need to pay and they go.
Do you pay them per piece of bread?
No, meaning for example, with their off-roading materials.
Oh yeah, the offloading materials. Huh?
So you haven't made bread yet.
Okay. Yeah, generally you should add that to your cost of acquiring your materials. So you imagine when I say 2,000, I should include the actual cost I paid to buy the baking flour, the cost I incurred when I was going to buy, bringing it, offloading, right? So all those are incidental costs to your materials. You should add them to your material costs, definitely. All right. Deogracious, is your hand still up? Bernadette, is your hand still up? Or...
Yes, 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 yes.
Okay.
It is.
Yes.
I needed some clarification, Yusuf. You know, the way you have projected this is that we expect maybe this is a running business. But I'm imagining that if it was maybe a starting business, there would be changes in the production. Maybe you might start small and maybe later on you could increase, like you said, 150 loaves. Maybe later on we could be producing 500. How do you capture that in here? Because this projection seems to be like flat, yeah?
Yeah, great. I mean, no, this is meant even to be for a starting business, right? And you could say, maybe I'm gonna start off at 150, then maybe I grow to 300, because generally when you're starting business, you know, it's fair to assume that you're going to be at a loss in the first couple of months as the business grows. I think that's what you mean, right? Right?
That is true. That is true. Yes,
Yeah.
yes, yes.
So this item here is what you need to keep playing with so that you end up getting realistic assumptions, right? And again, that's one thing we encourage entrepreneurs. We encourage you to have fairly realistic assumptions. Do not overpromise and underdeliver. Yet, you know, the reality is, you know, when business is starting, we make losses. So you can see before break even, did break even change? Okay. Okay, before, so you can see up to a point of breaking even, our sales of 2.5 here. All right, enough to get us there. Did I change the right column? Oh, I changed the price. Patrick, your hand is up.
Yes, I was inquiring. Often we're asked to make projections for social impact businesses. How would we go about that if we're going to make a projection on a social impact venture?
Okay, what I know is that social impact, all you're saying is, as much as you want to keep track of financial goals, you also want to balance it with non-financial goals, all right? So financial goals would be things like your sales, your gross profit, and your net profit. The non-financial would be things like the number of loaves sold, which means maybe this could be translated to how many families you are arriving at, okay? So maybe then you could add and say number of families served, right? And maybe if you assume that each family takes 5 loaves a month, you know, that's a kind of thing that you factor into your equation. So the first thing is to determine the various targets which you have, right? In as far as social enterprises and impact businesses are concerned. Unless you have maybe specific examples of targets, but does that answer your question, kinda?
Yes, it makes it very clear. Normally, it's difficult to show how much a business has been impacted, but this is a bit clearer now.
Yes, and I'm sure they also want to see your impact on labor, the number of people you employ, right? So you can also keep track. You can say number of employees, right? And you say maybe here I started with 5, I go on increasing, things like that on a monthly basis, depending on the salaries. Yeah, so it would be important, obviously, that we all balance our financial goals with the non-financial goals, all right? So that we are not purely money-minded, okay? Alex Kasule, what if the venture was in transport? How do we come up with the Excel? Transport. Well, again, the format is the same. Can you break down your cost structure into variable and fixed costs? Great. What are you selling? And by transport, I don't know what you mean. Vehicle hire? If it is vehicle hire, what is your price per hire? What is the expected number of customers per hire? All right. Price per hire, expected number that you're gonna sell. So all this, can you figure out that equation you need to determine your sales revenue, right? Because sales is a function. It is price times quantity sold. That is pretty standard. Your variable costs are also gonna be cost times quantity sold. Okay, your fixed costs, those are on a monthly. So whether you're talking of transport, poultry, you name it, you should be able to create a model like this for any business. All right, which is why I didn't come with my own business in mind. I was free to say, give me whatever business you want, I will be able to model it, right? Okay. Alex, I hope that answers you. How would this P&L look if it was a service type? Same thing, same thing. You probably wouldn't have materials here. You probably would only have labor, direct labor, if you pay per that service which you incur. Really, this comes down to you appreciating the nature of the costs of that business, okay? For an oncoming young entrepreneur who has a little amount, your target is very high. Where do we? Well, I was just drawing a sample model, right? You don't have to incur all these high fixed costs. But whatever business you're starting, I would encourage you to spend some time setting realistic targets. Yeah, I was just drawing up a model for you, but it's up to you to make sure your forecasts are realistic, right? And let's not be too optimistic, right? Maybe another way of reducing our, our optimism is to say, let's add something called miscellaneous expenses or unforeseen costs. And it's up to you to say, maybe my unforeseen costs will be 30% of my total costs, right? So I could say, what's 30% of 1.8? Yeah. Know what I mean? Though 30% could be pretty high, okay? Okay, any other questions? Where do you take purchases if you buy in bulk, maybe quarterly on the P&L? Shani, when you buy things in bulk, remember those are now stocks, okay? Stocks or inventory sits on your balance sheet, right? Because it is an asset. Now, the stock which you then use in production is the one which you take to the profit and loss, okay? That's how it is. And each time you take to production, your asset reduces. That is how this is done, which is why I say this is just part one. Part two, we should be able to show how inventory movements would move, all right? What about did you mean medical facility with many fixed and variable costs? How do you even forecast? Just take the time to appreciate the movement of your costs. It's not impossible, really, okay? It's not impossible. And I would think manufacturing businesses are the hardest to forecast. Thank you for appreciating. Yes, thank you for appreciating. If there are no more questions, would that be all? If there are no more questions, I hope I've delivered in time.
Yes, thank you, Yusuf.
You're welcome.
Wait, don't we have any questions from Facebook today? We are also live on Facebook.
Oh, we're live on Facebook. That's great.
Yeah, we're live on Facebook. But,
it seems I didn't answer someone's question here. Pendo. If Pendo is on, maybe you can unmute and speak. I can't seem to find your question. Okay, where do you put capital injection from the founder? It usually takes long to hit a realistic BE. What's BE? How do you use that to know your capital needs and payback period? Okay, first of all, capital is a balance sheet item. Okay, so some of these questions, I would like to address them in part 2. Part 1, I just focused on profit and loss. Can you forecast how profitable your business is going to be? Can you estimate the quantities you can sell, your variable costs, your fixed costs, your break even, your gross margin percentage, your net profit percentage? Those are the basic things that I would expect you to know when you're trying to forecast the profit and loss, right? So we should be able to dive more into this later on, right? Sam. Yeah, Sam, thank you for that. Yeah, I do have an ongoing series called Ask Me Anything Accounting, right? I should be able to, I would love to share my link, and you guys kindly follow me, right? It would be nice to have you there. All right. Okay, Davis, you are telling me about the Facebook questions?
Yeah. Right, I think we'll forward them to you, and we can cover them in part 2.
Okay. All right, that's good.
So
in the meantime, let me just share my email.
Okay. You can give some closing remarks.
Okay, I think really those are my closing remarks. In part 1, as you've seen, it's important to have a monthly breakdown of your first year, at least, okay? And start with estimating the price of whatever it is you want to sell, how much you expect to sell per month. Appreciate the movement of your costs. What moves with sales? What isn't moving with sales, right? All right, give me a second. I would like to share that link as well. Okay. Let me share the link to. All right. Okay, guys, feel free to check me out every day, Monday to Saturday at midday for 45 minutes. I'd love to make accounting more palatable to you guys so that you're not too intimidated by this subject, right? I think those are really my last remarks. Thank you guys for being a joyful class. And I'm glad you've appreciated.
Right, thank you, Yusuf.
You
have laid the foundation very well for financial projections. To the participants, Yusuf will be back after 2 weeks in the 3rd week, where he will take on the cash flow statement and the balance sheet. Hopefully, Yusuf will be able to conclude then.
With just one more session?
I don't think so, but at least to continue. Yes. Yeah. You'll be back to handle the cash flow statements, and we'll finalize with the balance sheets.
Yeah.
Now, a quick reminder.
Yes.
This webinar series of Startup Business Development is brought to you, implemented to you by Takers Hub. Sorry, I was looking at a message here. By the MasterCard Foundation through its Young Africa Works arm, at the Innovation Village, as you can see there, and implemented by TechBuzz Hub. Now, TechBuzz Hub, our mantra is growing startups. Here, our issue is to ensure that everyone is an entrepreneur first and foremost, and be a successful entrepreneur at that. Some of our products are things like enterprise mentoring and coaching. We have the incubation, but to really break it down so the average person can understand, if you have a business, a going concern, and you're having issues with identity, we have the branded department. So with branded, we create for you things like a logo. We create for you a presence that you can show to everyone out there. And if you can inbox me or the host, that's Kenneth, TechBuzz Hub, or even you can reach out to Yusuf, he will forward you to us. There is a discount going on right now. There's a discount. We are teaching you how to design those graphics. We are teaching you all those things that you need to give your business the proper sounding or the proper look that would help you bring out there and meet your projections, as Yusuf has said. And I'd like to remind you that next Friday, we really run out of time. Next Friday we'll be handling all your legal obligations. And I don't know if Moses is online, but Moses and Gorok will be taking us through managing your legal requirements. We'll be looking at how do you, oh, yes, I'm being reminded by the production that Social Clerk is online. Social Clerk, Ethan, do you want to say something quickly?
Yeah,
No?
yes, sure. Davis, thank you for the opportunity. I just happened to come to this meeting late. Sorry, but I heard some of what Yusuf had to say, and I think I'll most definitely rewatch the recording. Hopefully, I'm sure I'll get more value. Otherwise, I wanted to reach out a message to everyone in the meeting. Quite some engagement I see that you've been having here. My name is Ethan from Social Clerk. I'm team leading Social Clerk. So at Social Clerk, we understand that small businesses don't have enough money to invest in their marketing. They don't have that money to give to professional entrepreneurs, to those professional marketeers. They don't have the money, the time to also invest in creating content, creating graphics. So that is where Social Clerk comes in. We do for you social media marketing for very, very flexible prices, as low as 75,000 shillings. I have a video. I don't want to take much of your time. There is a video that we've created that can show you how we help you. There are some samples as well of what we do. You'll see some of the graphics we've built, some of the posts that we've done, maybe some of even the companies that we've worked with. But our services are for as low as 75,000 shillings. You come, we help you with content creation, we design for you professional graphics. We are even looking into venturing into creating videos for you, still at the same price or maybe at a slightly bigger price. We also boost for you content. So the content that we create for you, we also go ahead to boost it on Facebook so that most of your customers can reach you. And like I said, all of these are at quite small prices. I've left our website in the chat. I'm also going to leave a small video, a very brief video that I did, that recently did, and then maybe you can just go ahead to YouTube after this webinar, watch it, and perhaps give me a call as well, or just WhatsApp. Davis has my contact. If you can just also WhatsApp him and let him know. Okay, I'll also leave my WhatsApp inside here. So if you think this is something that you want that sounds interesting to you, please, you can go ahead and reach out to me. I'm leaving the video here. Thank you, David, again.
Right, thank you. So with that, I'd say this event has been brought to you by TechBuzz Hub Limited. Our mantra again is growing startups, and those are our past partners. If you feel you want to engage us, our contact is going to be shared in the chats. So from me and the team here, we say good evening and good night, and remember to stay safe. Good night and good evening.
Yusuf, I'll also be happy to receive this this spreadsheet, please. So I think you will be sharing it with Breakfast Hub.
Can you turn to slide 3? There's something I need there. The next slide.